Welcome to the Monday Morning Podcast. Today I'll be talking with Paul Cronin of Adriatic Metals. Adriatic Metals has a polymetallic deposit in Bosnia and Herzogovina. And this is particularly interesting because the commodity space is definitely heating up with fears around inflation. So, Paul, I was just wondering if you could give us a bit more about your background and the project you're working on.
Okay, sure. But I've been banking in the natural resource sector for quite a while. Primarily based in Europe. I was working for a South African fund in London. As I've sort of watched the European mining sector develop over the years, there's been ups and downs. The Europeans have incredibly high environmental standards. A lot of the general communities don't like mining. But over the years, we've started to see policy change a little bit. We've seen the European Union develop a critical minerals list, where they've basically banned exports of certain minerals. And I think with COVID, it really hammered home how fragile our supply chains are. What we've seen as a result of that is probably a little bit more protectionism around natural resources. And that's been the same in Europe. So I was always looking for an asset to acquire in Europe, and I wasn't quite sure I wanted to make the leap into the European Union. I was involved in another asset inside an EU country, and it was very challenging moving forward. And so we started looking in the Balkans. The Balkans obviously sits on the end of the Lithium mineral belt, which sort of runs right through Turkey and into Central Asia. And that Lithium mineral belt is host to some of the world's best mineral deposits. The interesting thing about the former Yugoslav countries is that Yugoslavia had phenomenal infrastructure. I mean, it was an amazing place in its heyday. But obviously in the early 90s, when it started to break up, there's been a withdrawal of foreign direct investment. There's been a withdrawal of industry. And that created opportunities. And you could go there and you could potentially find historical deposits that were not about and apply more modern techniques to them. And that's what we did here in Bosnia. We literally, got archive boxes of data, digitized it and analyzed it, and then decided that we thought that there might be something more there, and we were right, and we were successful. The basket of commodities, however, was a bit of a surprise to us. We knew that it would be lead zinc. We thought initially it would be, a VMS deposit, but we didn't have any historic drill core to look at and verify. But as we started to drill it out, we realised it was something more complex in terms of its structure, and it also had very high grade quantities of silver and gold. And I think we've then started to look at the deposit more really as a silver deposit than a zinc deposit, even though zinc makes up about 30% of the revenue. Silver makes up about 35%, gold's about 15%, and then you've got lead, copper, barite that make up the balance. And I think it was interesting because we love to see typically a bit of a sort of cyclical hedge between base and precious metals. When the world, we saw this in 2008 in particular, when there was a financial crisis, precious metals rocket. I mean, silver was up at $50 an ounce.
Absolutely.
In 2011. And when the world's doing well, base metals rocket. And I think we're in an unusual situation at the moment. We've never seen a period like we have in the last 12 months or so, where governments have had to borrow a lot, and they've had to print a lot. And to get themselves back on a solid economic footing, I think the general view is that they're going to have to continue spending, continue running up deficits, and do that with the flux of money that's already been printed, and that is going to lead to to an increase in both base metals and precious metals in terms of their pricing. And we've certainly seen that over the last year with gold, coming up near 2,000. Silver's gone from sort of $12 or $14 up to about 26, 27. Zinc prices have gone from 2,300 to 2,900. Lead's up over 2,000. Copper is almost at record highs again. And so we're pretty pleased with our timing on this. Somewhat, we didn't plan COVID. We didn't.
No one did.
We didn't expect that to happen. But the impact of that means that we're coming into a cycle where both base and precious metals are really well priced, and we are going to see inflation, and obviously gold in particular is an inflation hedge. Silver is a more interesting commodity. In that it obviously has a precious metal component that you can pick up a UK banknote and it says on the bottom of the note that the government of Bank of England will pay you in gold and silver. Silver has always been something that's underwritten currency. But what we're also seeing at the moment is obviously a huge push toward electric vehicles, and silver is vital because it has specific conductive properties for rapid charging. And I think that's what's pushing silver demand. And then if you look at zinc at the moment, the treatment charges globally for zinc smelters are very, very low, as are copper. And that indicates to us that smelters can't find product. There is a surge in demand, and there just isn't enough supply. And ultimately, that is going to lead to higher pricing, no doubt about it. So we're pretty fortunate, I think, to have that basket of commodities here in Bosnia, and then over in Serbia, which I guess was a little bit of an opportunistic acquisition by me. I'd known this project for a while. I'd been seeing it flounder because, like so many small Canadian companies, they raise money, they do a little bit of work, they pay a lot of salaries, and nothing really moves forward. But they were sitting on an asset that we thought had similar characteristics to what we had in Bosnia.
Sorry, Paul. What's the name of the project in Serbia? I didn't catch it.
We call it the Raska project.
Okay.
Raska, named after the little town that it's near to. And so we decided to acquire that company. I spoke to the major shareholders and said, look, we think we can move this forward. We'll buy it from you in shares in Adriatic. You'll still have an equity exposure to the success of the project. And ultimately it was voted through to 99.9%. So we picked that up in October, and since then we've been pretty active on it. We've drilled, I think, close to about 15,000 meters now. We've taken what was a small historic resource of around 4 million tons, and we have grown that quite substantially. And it is looking like it's a good pipeline project for us. Once we get the Vares project in Bosnia into production, that team that we have put together to do that will then just move 200 kilometers down the road, and we'll build the project in Serbia. And again, just phenomenal infrastructure. It's got power, water. It's got a railway line to a port. I mean, these things, they're unheard of. When you look at the big iron ore projects in northwestern Australia, I mean, they were not economic until BHP and Rio basically built, $1 billion railway line. Well, we've got it all there, and I think that's put us in a really strong position. Certainly, the margins on the Vares project, because we have done quite a lot of work on the economics through scoping study, pre-feasibility, and we're now completing a definitive feasibility, are very robust.
I saw the numbers, Paul. It was quite impressive. The IRR, I believe, was the internal rate of return, for those who don't know, was sitting at about 113%, I believe.
Yeah, that's right. That's right. On a relatively modest upfront capital. And we're going through the process at the moment of putting that bank financing together. I'm here in Bosnia with a bunch of guests who are looking at financing that. Um, and we'll complete the definitive feasibility in June. And I think, commence construction later in this summer, so end of July, August. So that project will start seeing cash flow early P3, because of its high grade, because of commodity prices being where they are. It will pay back that debt probably in the first year. And that will allow us to take the excess cash flow from 2023 production and invest it in our project in Serbia. But at the same time, the deposit that we've found here in Bosnia, these sorts of deposits tend to repeat, depending on where you've got things structurally and geochemically. We know that this deposit sits between two faults. And we know how it got there, and therefore we know what to look for in terms of finding where that deposit will repeat somewhere else. And they typically repeat close by, which is why last year I begged and pleaded the Bosnian government to give me a new mineral concession that covered the entire known mineral belt in Bosnia. And they said to me, Paul, this would be the biggest mineral concession we've ever awarded. If we didn't have confidence in you that you will actually go and do the work there, that you'll make the investment to find those repeats, we wouldn't have given it to you. So there's a strong trust between the company and the government here. They've seen what we've done. We've employed a lot of local staff. We now have over 60 staff here in Bosnia. More than half of those live in the local town. We tried to recruit as many young people as we can, because Bosnia has a problem, and they call it the brain drain. All of these kids are going through school, they're going to university, they still can't find a job, they do a master's degree, and then they end up going and working in a factory in Germany or Austria or somewhere, because there are just no opportunities. And we made a conscious decision that rather than bring in or recruit from the existing mining industry here, we're going to recruit straight out of university, and we're going to train them up. And that has two advantages. One is it stops that brain drain. It gives you a lot of staff loyalty, because this is their first job. They get, you get to shape them culturally as to how you want them to operate. But it means that I can also shape the health and safety culture, which for me is really vital. I mean, we can have people thinking health and safety all the time, because in our industry it's vital that you do that. And I think, those things that we've done, which have there's a strong business rationale for them, have been really well received by the Bosnian government because of their impact on the local communities. Has been a very positive one. We have staff now that are, when I hired them, they were, 24 years old, straight out of university. They're married, they're having children. These are the first children born in this town in the last 30 years.
Gee whiz.
And that is a big motivation for the way we're trying to do things. We're trying to encourage people that we employ to move into the municipality, to move into the town. Bring your family. It's a great place to live. There's lots of accommodation available here, because it used to be a town of 30,000 people. It's now 7,000. We're encouraging our suppliers. We're saying, look, if we contracted you to do all this fabrication work for us, would you set up a small factory in Barish? And they go, yeah, we would. If we're awarded that contract. And so the whole idea of sustainability for us is not just about really strong environmental stewardship. It's really strong sort of social interaction and economic interaction. So trying to get more than just our direct employees and showing having an economic benefit on the local community. It's about trying to get our suppliers to create more industry in our local community and offer more opportunities than just what we could do alone. And we've talked about that vision quite a lot. We talked about it with what is now one of our largest shareholders, the European Bank of Reconstruction and Development, about how we want to use these policies and implement them in a way that will create, a sustainable economy in this area. And we know that there are other initiatives, that there are extensions of the railway line up to Belgrade. We know that if we work with some of the shipping companies in terms of containerizing our materials from Barish down to Ploče, that will open up, import-export routes into the Sarajevo region that haven't been there in the past. And so the whole project is saying, well, this is what we need, but if there's a little bits that happen around the side of it to support it, it'll actually have a multiplier effect on the local economy.
That's what
and that's great. Yeah, and that's what we're trying to achieve here. We've been working with EBRD, the group in London called Critical Resource, who are ESG consultants to the industry, on how we deploy that. And at the same time, we're still looking all the time at how do we reduce our energy usage? How much solar power can we get installed here? Where can we buy more hydroelectricity from? Trying to keep a really strong environmental footprint on the project as well. Electrification of fleet where possible. How do we alter the gradients of haul roads so that those trucks use less diesel? All of those little things that we're trying to do to minimise our carbon emissions as we go into that sort of detailed engineering phase.
Well, that's an absolutely fascinating overview of the overall project, as well as the sort of macro factors that you talked about. I noticed you discussed inflation and your belief that inflation is coming. I'm also of that belief, and it's been one of the themes we've talked about quite a lot in our editorials. You mentioned that you've got sort of this polymetallic resource that has both an inflation hedge in the form of gold and industrial metals as well as silver. I was just wondering, do you see your company benefiting from a variety of scenarios? And if that's the case, how do you see ADT developing in the coming few years?
As a mine operator, you have no choice but to be price agnostic. It is what it is. You've got to take it. You can make a decision to hedge. I mean, we're certainly not going to hedge in these markets because we believe both base and precious metals will increase substantially over the next few years. The challenge here in this sort of cycle is you do see an increase in M&A activity. And the challenge for us, we're a company with growth plans. We tend to be a European mining company of substantial size focused on Europe. And the challenge here is for us to not get too impatient and start buying assets at the top of the market. We would still like to look for assets like what we've got. Where there's a little bit of historical work and 3 or 4 years of drilling, and you've got yourself an economic deposit, and off you go. To that end, we're obviously doing a lot of exploration work this year. That's key to our growth platform. We have $20 million of budget allocated to exploration, US dollars. So that's for a junior company, that's a big chunky budget. But we're also going to be picking up new mineral concessions in Bosnia. And potentially in Serbia. We're also looking at some of the historical operations that were in Kosovo for where we might be able to do very low cost acquisitions that with a little bit of investment in drilling, we can prove up new deposits. There are other opportunities in Europe for acquisitions in both electric ED metals, in precious metals that we're looking at as well. But we've got a lot to do this year and next. And our focus is going to be get the Barish project into production, get it producing cash flow. And then I think we'll continue to evaluate those assets and we'll continue to refine our view on them. And if we think it's the right time and at the right price, we'll go and expand our asset base.
That's so important because you're certainly not early stage at all. You're actually quite advanced in your project. And getting that cash flow going early is often quite a high priority for mining companies such as yourselves, because I guess it just sort of adds that extra confidence to the project, and then you can build from there. So your foundation would be the Varish project, and then you'd move on to Serbia, and then you mentioned you're looking at EV battery metals. Is that the case? And there's an immense amount of excitement around that kind of thing at the moment. I'm actually not familiar with the various deposits in Eastern Europe, but is that something you could actually find in Serbia?
Well, there is already a very large lithium project in Serbia owned by Rio Tinto. There are other lithium deposits in Serbia. I think metallurgically they're probably a bit challenging, and I don't think I'm quite ready for that challenge yet. Rio Tinto's got, an army of metallurgists stuffed away in a lab in Melbourne somewhere who can work this out, but we don't. Where I'm probably more going to focus on is nickel, quite frankly.
Okay.
And that's what we're looking around for. Nickel and copper.
One of the things I noticed in the nickel market recently was there's a development out of China where they came up with a new processing sort of approach to things, and then that had a significant adverse impact on the nickel price. I was just wondering if you had any further thoughts about nickel's long-term future as a battery metal, as well as the sort of stainless steel side of things.
There's been talk of technological disruption in the mining industry for years and years. I remember probably 15 years ago, some Australian company came out and said we can recover uranium from seawater. That had a short-term impact on the market. In the reality, the process for doing that might be technically possible, but it's economically unfeasible. And I think in the same with some of these developments that we've seen recently around nickel extraction are going to prove to be the same. We've seen technology in terms of leaching gold out of sulfides. It just doesn't work economically. So all of those technological disruptions, I think, are always going to come to the core of how we do things. The challenge for the industry is do it better and do it cleaner, do it in a more environmentally sustainable way. I think nickel prices will continue to do pretty well. They're obviously, substantially above where they were a year ago. And I think, there is a lot of opportunity there, and if you can find it, happy days.
Awesome. Well, I think I'll just leave it on that note, Paul. It was a wonderful chat. We covered some very exciting specifics about your project in Bosnia and Herzogovina. And I really appreciate that insight you gave us about sort of the more macro elements behind the various metals projects out there. And I really appreciate your time today, Paul. And I wish you all the best.
No, you're very welcome. Thanks very much. Nice talking to you.
Well, that was a fascinating interview I had with Paul Cronin of Adriatic Metals. He shared some excellent insights on macroeconomic factors related to a variety of metals, and I really enjoyed his comments on nickel. Now, if you liked this podcast or video, be sure to subscribe, comment, get in touch, and you'll hear from me soon.